Super micro, is there any opportunity here? The stock has been devastated. It was a $100 plus stock a snap of fingers ago. And now it's 23 bucks, might be, who knows, 22 bucks, something, right? It's low 20s now at this point in time. So I have really no ambition to do anything here in regards to SMCI. But if you force me to do something, the only thing I would do is go small on call options. $25 strikes, $30 strikes, $35 strikes. And try to play it as, all the worst news has already been out there, already known, and it only gets better from here, right? I would avoid buying put options, especially any put options under $20. And the reason being is you've already got so much worry and scared and such panic selling in the stock for really the past month, if not several months, that I think to get bigger selling pressure, especially push the stock down to $15, $10 is going to be tough. So I would avoid buying puts. I would also avoid buying a bunch of shares in the stock. I think there's way too much uncertainty about what they were doing or not doing in regards to their books. So I just don't want to be part of a stock like that, right? I would also avoid shorting. I think shorting is a big risk. Let's say you short the stock tomorrow at 22 bucks. This maybe could pop to 42 in no time. If all of a sudden the story just gets a little bit less scary. That's all that needs to happen in regards to SMCI. If the story just gets a little less scary, right? You could be looking at 100% losses on this one quick. So the time to short was a month ago, 3 weeks ago, 2 months ago, 3 months ago. That was the time to short the stock. So yeah, that's my belief in regards to this one. The risk reward is not there, and so I'm not interested, man. I hate doing short term plays. I like just long term investing. So. It's just that's a whole messy situation, and I just think there's so much risk on both sides, man. So much risk on both sides. Like, why do you even need to be messing around with that, right? Now, where's my prediction over the next 3 years on which companies become the biggest market caps or not? Here's my prediction on where the biggest market caps are in the stock market in 3 years from now. Here's my prediction. So, what we're going to see here is I actually have NVIDIA still being the biggest company in the world in 3 years from now. I think there'll probably be a $5-ish billion market cap in 3 years from now, which means the big gains are already done in NVIDIA. And that's what I personally believe. I believe the big, major game-changing money-making days are over in regards to NVIDIA. That doesn't mean you can't make money in NVIDIA. I think NVIDIA could still give a positive return over the next 3-year span. But in terms of that, crazy money, those days are over, in my opinion. We one last probably big run in that stock. My guess is after this earnings come out, I think they'll probably beat numbers considerably. I think they'll have a great guidance. If they have anything to say about 2025 numbers, I think it's going to be booming. And I think you probably get one last move in the stock to the $150 to $200 range. And that's probably where the stock is, multi-year peaks or stays around there for the next several years. But that will be enough to keep it as the number one biggest market capitalization, especially if you push it to around a $200 stock price for the next 3 years, ultimately, right? So I believe NVIDIA is still the number one big dog 3 years from now. I believe number two will be Amazon at about a $4.5 trillion market cap 3 years from now. And how they get there is they got to continue to expand that e-commerce business. That advertising business continues to boom, and that's like a straight profit engine for them. And they're also seeing big acceleration in regards to AWS. So I think Amazon sets up very well. Jeff Bezos has been selling a lot of shares, right, to fund Blue Origin and other things that he wants to do, right, float around his yachts or whatever. And so Jeff Bezos definitely has been putting a lot of selling pressure on the stock, right? I believe that selling pressure starts to abate in 2025, and I think that's when the stock really has its next big bull run. And I think the stock goes to 4.5 trillion over the next 3 years from a little over $2 trillion right now. Number three biggest market cap, I believe, is actually going to be Meta. I believe Meta's got a double coming, and then I think it's got another double coming after that. So when I say another double coming, I think this stock goes to $1,000 plus a share in either 2025 or 2026. 2026 at the latest. And then from there, it'll do another double, but that double will be about a 3 or 4 year double. So assuming it doubles to $1,000 plus in 2026, we probably don't get the next double to $2,000 a share until like 2029 and maybe 2030, right? So I have Meta being around a $4.2 trillion market cap in in essentially 3 years from now, if we fast forward 3 years from now, right? I have Apple being the fourth biggest, 4.1 trillion. I do think Apple will be a moneymaker, just not much money to be made there, but I do think it will make money. I think the next generation of iPhone looks pretty promising. Once the Google mess gets behind them, which that whole DOJ situation, if Google can keep making that payment, I think once that's behind the company, that will be good. And so ultimately over the next 3 years, I do think Apple will uptrend. It's just going to be a sleepy kind of uptrend there. That puts me at Microsoft as number 5. I think that'll be a $4 trillion market cap. They're just a company that executes very well. They execute very well. And so, yeah, I have no belief that Microsoft's going to go down in the next 3 years in terms of the stock price is down 3 years from now. Now, I think it's going to probably gain, around, 25 to, I don't know, maybe 30% or so in regards to that stock. So $4 trillion market cap I can see for Microsoft, right? Six biggest, I think it's actually going to be Saudi Aramco. I believe that company is actually going to make a big upside move to about a $3.8 trillion market cap. And the reason being is I would actually be more bullish on oil price over the next few years. And I think actually oil price will be what leads us to the next inflation cycle, which was not going to be good when that eventually comes. But Saudi Aramco, I think that's going to be actually probably a double up from here over the next 3 years. Not a stock I'm invested in, not a stock I'm interested in, but I wouldn't be surprised to see it kind of a double up or just over a double up in the next 3 years in that one. Google, number 7 biggest, $3 trillion market cap. Google has a lot of issues. They have a lot of issues, but they also have a lot of great businesses. So I think it's a moneymaker, just not a huge moneymaker, right? Now, in regards to 8th biggest, I believe it's actually going to be Tesla. I think Tesla has significant upside over the next 3 years. I have them at a $1.8 trillion market cap from an $800 billion market cap right now. I think they have significant upside in regards to Tesla. As they start growing vehicle volumes in a substantial way again, 3 years from now, they're going to have the affordable vehicles in mass production, right? So they're going to be selling like crazy. Services business is going to make the services business of today look very small. And so I think Tesla really sets up well. And they should have already solved FSD 100% by that time. So you should have the robo-taxi fleet already up and rolling in most of the major cities out there by that particular time. And so I think there's just going to be a lot of hype and excitement. And also think about where Optimus will be in 3 years from now, right? Like, is Optimus being sold 3 years from now? I don't know, maybe not. But with how much progress they're making in regards to Optimus so quickly, I think Optimus will be pretty darn impressive 3 years from now, and I think people will be starting to price that into models, which I don't think anybody's pricing in Optimus. Additionally, the energy business continues to boom for the company. I think that sets up the company up very well. So yeah, I think Tesla will be about a $1.8 trillion market cap 3 years from now. Berkshire Hathaway, I have them as 9, $1.5 trillion market cap. I think they set up very well. Buffett's got them in a great cash position. He also has some of the best stocks in the entire stock market in his portfolio. Additionally, they've got all their consistent businesses, and they're huge in insurance, and insurance has been such a straight profit engine for the company, right? TSMC, I have them in the 10th biggest, $1.4 trillion market cap. I do think that stock can make people money over the next, we can call it, 3 years. I just don't think that's ever one of those companies that you see that crazy explosive growth in regards to them, because at the end of the day, they kind of just run the great commoditized business. But at the end of the day, you can't really replace them. And so therefore, they just put up their numbers. They're good numbers. They're not going to be anything that shocks you, but they're good numbers overall, right? And so $1.4 trillion market cap, that's where I have TSMC there. So overall, that's my belief. We'll see, obviously, what happens over these coming years. But that's where I think a lot of these companies will kind of end up being at. There always is a potential, what if any of these companies launch some game-changing product or service? The thing is, even if any of these companies did launch a game-changing product and service in the next 3 years, it would take such a long time for it to build out to major money, because all these companies are doing such crazy revenues now that, it's very difficult. It's very difficult to change the numbers in any substantial way in a matter of a 2 or 3 year span. So, if they come out with any game-changing products or services, those won't really affect the numbers substantially for these companies really until we could talk like 2028, 2029, 2030, into the 2030s, right? How would you like access to all my best course curriculums? My Becoming Master of the Stock Market course, my Stock Market Investing Mastery course, my Stock Options Mastery course, my Millionaire Playbook. How would you like access to all my best courses as well as the ability to have access to my 6 and 7 figure plus Discord community, where we're constantly keeping in touch with each other, talking about what's going on in the market. How would you like exclusive weekly videos from me? How would you like the ability to see what stocks I'm buying and selling in my $2 million plus Fidelity account? If that all sounds pretty interesting to you, apply to join my private group. That is going to be linked in the description area down there. You can click on that, fill out an application, and go ahead, hop on a call with Andre. Andre will walk you through the whole process. He'll walk you through the whole group, and you can go ahead and join us in there. Once again, the link for that is in the description area. Dan Niles on key takeaways from big tech earnings.
Beat on the top.
Which, by the way, that looks phenomenal, right? Like almost like all the big techs have beat across the board except for Tesla on revenue. They had a slight miss there. But I mean, look at that. Tesla beat on EPS. Google McDougal beat on EPS. Microsoft beat on EPS. Meta beat on EPS. I mean, this is just amazing. Even Apple did a double beat. Jeez. And remember, this is who runs the market. These guys run the market. So when you have those companies just coming in and smashing their revenue expectations, their earnings per share, how are you going to get the market down? You just can't. When these companies, whenever they do falter, whenever that is, which I wouldn't bet on that in the short term, but whenever these guys falter, whenever they actually have a misstep, that's when you could actually get the market down big. But it's near impossible to get the market down big when these guys are just coming in and beat numbers quarter after quarter after quarter after quarter. What are you going to do?
Bottom lines, except for Tesla, which missed revenue expectations. Join us now with what he likes in big tech. Dan Niles, Niles Investment Management, founder and portfolio manager. And always like having you on, Dan. And I'm trying to remember last time, I think there were certain members of the Magnificent Seven that you said, I don't really think I'd want to get ahead of the results
Apple.
This time. Do you
Apple.
remember which ones those were that you had some concerns about, and was it borne out?
Yeah, I mean, we wrote a piece on Monday about what we thought would happen this week, and it pretty much turned out the way we expected, where Google came out first, did very well, set a very high bar for the rest of the companies to report. Then Meta came out, had solid results, but they always guide conservatively in the September quarter for the out year, and the stock sold off, which is what we expected it to do. And
you know what stock that reminds me of? Elf on a Shelf. Elf does the same thing.
Microsoft, the guidance was a problem like we expected. The forward numbers went down for the second quarter in a row. Azure in particular, which is their cloud business, the guidance was poor there. And so that stock got really hit pretty hard. And then you get to yesterday where Apple went ahead and in the most anticipated cut, they guided the December quarter revenues to low to mid-single digit growth. People are looking for 7%. So that obviously went down again. And then Amazon was the real surprise to me, where e-commerce guidance was actually pretty strong, even though you have one less weekend this year between Thanksgiving and Christmas for people to go shopping. That didn't seem to matter. Business is really good for them. Now, our two favorites coming out of this, it's the same two favorites that we had going in, which is Meta and Amazon through the rest of this year.
Exactly. Right with me, baby. Hey, so in regards to Amazon, let me be very clear about Amazon. I think if it wasn't for the fact that we have the election this upcoming week, I think Amazon probably would have traded 210 to 220 today. 210 to 220. It would have been a big double-digit up day for Amazon. It was still a good day for Amazon, but it would have been a great day for Amazon stock. Had it not been for the fact that we have the election this upcoming week. Because a lot of people just don't want to play. If you're more of a trader type, a lot of people are just kind of like sidelines until after the election. Let's see what happens with this election, and then we'll jump back in. Because people look at it and they think there's a big risk, right? If there's a contested election, right, and there's all that drama and what happens there, people are concerned about that. What if it's a blue wave? People are concerned about that, right? That would... because then you could be talking about there could be 5-10% downside in the S&P 500 in a quick amount of time if that happened, right? And so that concerns people about what if we have this sort of situation, right? I think ultimately, I think the market really wants Trump, and then the market really wants kind of They don't want anybody to have control in terms of Dems or Republicans at the end of the day. So I think they want Trump to win, but I think they don't really want anybody to really have control over things. So therefore, we kind of have a little bit of a stalemate in government, and that will just kind of be what that is, right? And maybe some things could get passed here and there, but there's no major changes anytime soon. So my belief is that's what the market wants, right? And so that's what the market's hoping to get. But a lot of people are just like, I don't want to get in front of that, man. I don't want to get in front of that. And they're like, if the election goes the way we want it to go, we'll jump in Wednesday, Thursday.
I don't think you mentioned Tesla there. When I see 100% pure profit from selling to other automakers for those environmental credits, is that a repeatable business? Is it a business? Is there a reason to celebrate better than expected earnings because of things like that?
Yeah, I mean, Tesla, for me, I'm a growth at a reasonable price investor, and it's very hard with over 100 PE for me to make a good risk reward case in the name, because people aren't really focused on that so much. They're looking at the optionality of what's in the future. And that's energy and storage, where it's about, less than 10% of revenues, but growing over 50% a year. You've got robo-taxis, you've got full self-driving over the next couple of years. And that's what people are really owning the stock for, Joe. It's not as much on the EV side. Obviously, that's the base business that gives them the money to fund all the rest of this. But yeah, I have the same concerns you do, because you do have the tax credits. Obviously, we have a election coming up in a few days, and depending on who ends up in charge, EV tax credits, et cetera, are going to change. But having said that, maybe Tesla's treated more fairly relative to the other car companies that have unions. So, we'll have to see what happens. Obviously, the election is going to matter for all of these big tech companies going forward, and the outcome of that, at least in the short term. And then we'll get back to business as normal, which is we'll go back to focusing on fundamentals for all of these names and for the market as well.
Yeah, Tesla has driven people crazy for 10 years now in regards to Tesla stock, right? It really got on a lot of people's radar about 10 years ago, around 2014, after it had a kind of a pretty insane move. They went IPO, it was either 2010, 2011, and then, stock didn't do anything at first, and then it had an absolute epic move. And that really got on a lot of people's radars. And for the last 10 years, Tesla stock's driven people mad. Because they look at it and they're like, oh my gosh, the valuation's so insane. The PE ratio is so insane. The price to sales ratio is so insane. Those sorts of things, right? And then they say, look at the other automakers, where they trade at. It's just always a fascinating thing. They keep saying that 10 years. But the thing is with Tesla, it's going to keep driving people insane. There's going to be another 10 years of this stock driving people mad. Are they going to be like, frustrated? Oh, it trades so rich. I wish the company traded cheaper. I would buy the stock, right? That's exactly why the stock won't trade cheap. Because there's so many people that would love to own this stock if it was 50% less valuable. But the problem is, you can't get down there because there's so many people willing to buy it all the time, right? And so it's always going to trade rich for at least the next 10 years. It's going to drive people mad over the next 10 years, just like it has the last 10 years. And you have a lot of people saying it's overvalued, it's a ripoff, how can people pay this price? Oh, why they just focus on the future? It is that type of company.
I don't think
it's been that type of company.
None of the big seven don't have a big stake in AI, I guess, and they're all spending money. What? Who's at most risk of not getting a big payoff for the money they're spending, and who's doing it well and could have a huge payoff from what they're spending?
Google's.
Well, the one that should worry you is Microsoft. And the reason I say that is we've all heard of OpenAI and ChatGPT, which really kicked all this off at the end of calendar 22. And obviously, Microsoft has a huge stake in OpenAI. If you look at the numbers, though, for Microsoft, their June quarter, Azure, which is their cloud business, was growing 35%. Then that went to 34% in the September quarter, and they guided to 31 to 32. So the numbers are going down. If you look at Amazon, their cloud business has actually accelerated over the last 5 quarters from 12% to 19% growth. They're the biggest. And if you look at Google, which is the smallest of them, their growth actually accelerated from 29% last quarter to 35% in the quarter they just reported. So you've got to ask yourself, is Microsoft actually getting a return for all of this money that they're investing, when if you look at the numbers, they've actually gone down over the last 6 months?
And if you really want to go down the rabbit hole on this subject, on ChatGPT, Microsoft, all this stuff, look more in depth into Llama and what Meta's doing with Llama. I went way down the rabbit hole last night, really in regards to Llama, because I was listening to the conference call last night, and I listened to some of it the previous night, and then I finally listened to the other half last night, right? And I really went down the rabbit hole in regards to Llama, because I could just tell Zuckerberg's so excited about that opportunity, right? And I really went down the rabbit hole there. And it's fascinating what they're doing with Llama. And there's a potential that they end up commoditizing LLMs in general, which could be phenomenal for Meta, but very bad for ChatGPT. Very bad for Microsoft. And so it looks to me like Llama's actually, in my opinion, they could end up being, because they're open source, anybody can use Llama, they could end up being the most well-positioned, right? Which, this goes back to even bigger fights of like, you know, who's leading the company and who's the best visionary, right? And you look at Microsoft, they have a very good CEO in Satya Nadella, right? Very good, proven CEO. Meta's got to level up. Meta's got Zuckerberg. And Zuckerberg is a genius level businessman. Satya Nadella is a hell of a CEO. Very good CEO. Zuckerberg's genius level. There's a difference. There's a difference there, right? Zuckerberg's thinking in ways that are so far ahead of other companies, it's not even funny. He sees ways of creating massive platforms, massive things that no one sees coming. And then you look back 5-10 years later and it's like, dang, like, how did we not see that coming? Like, how did Zuckerberg see that, right? It even goes back to Facebook and building that out to be such a successful thing when they had so much competition. Everybody wanted to try to do what Facebook did, right? And they were the only ones that were able to do that. And he was able to see how valuable a massive platform like that could be. When other people are trying to understand how are they going to make money from this thing, it's just some silly thing kids are using. Like, what is going on here? You know, sure, college kids are using it, high school kids, but who cares about this? And it ended up becoming one of the most valuable properties in the history of mankind, right? When they made that $1 billion acquisition of Instagram, people were like, what? Paid $1 billion for this app that people just take photos and videos of? This is silly. Come on, right? Doesn't even have a big user base. And then that ended up being the most genius business acquisition arguably of all time, right? He was able to see that. Does a $19 billion acquisition of WhatsApp. People are like, it's a messaging service. How are they ever going to make money from this thing? Like, so what? A bunch of people send messages. Wow, big deal. Like right now, people are starting to realize, oh, dang, like wow, this WhatsApp opportunity is pretty massive when it comes to business messaging side and how much opportunity that gives for Meta, right? And so now we have Llama taking off like crazy, right? And when you got to go down that rabbit hole and really start searching, why is Llama important? Why is Llama important to Meta? How will Meta make money from Llama? And start going down that rabbit hole. A lot of good developers have done in-depth pieces on this and share a lot of opinions on different platforms that you can really learn a lot from. And then you begin an understanding, damn, man, he's freaking genius, man. He's playing at a higher level. He's playing at a higher level than Sam Altman's playing. And no disrespect to Sam Altman, and no disrespect to Satya Nadella, but I'm just telling you, Zuckerberg's playing on a higher level than both of them combined. And you got to go down that rabbit hole to really understand this. But I'm like, damn, man. And he does it again and again and again. He's just on a different level.
That's the one that should concern you, and especially when you marry that with the valuation, where you're talking about a 33 PE, and the market, by the way, is trading at 24 times. That's the one that should give you the most concern, I think. The second one is obviously Apple, which you go, the company has grown revenues cumulatively, if you include this year, calendar year, at 5% over the last 3 years. And every product, you know, people go, oh my God, Vision Pro is going to be terrific. And then you figure out, no, nobody's going to wear ski goggles on their head. And then you look at what's going on with the iPhone and the features that they've rolled out, which surprised me, they weren't particularly good to start with. They're going to get upgraded in December in the US, but then you have to wait for next year for it to get upgraded in the rest of the world. And you've got a company that's also trading at a 33 PE for 5% revenue growth over the past 3 years combined. And so that's the other one where if people finally go, you know what, the problem isn't this, it's market share losses to people like Huawei that have resurged in China, then that multiple could come down, even though you continue to do, low single digit to mid single digit growth, which is what they guided for the December quarter.
Okay. I would ask you about, macro. If
the two most genius businessmen I've ever studied and seen, and I've probably studied every single business person that's at least a big name ever, the two most intelligent I've ever seen are Steve Jobs and Zuckerberg. They're the two creme de la creme, man. They're the best in regards to that. Bezos amazing, Musk amazing. I would say Musk is the biggest thinker of anybody I've ever seen in terms of just like these big ideas and be able to put together stuff that people are just like, that's impossible. Like, you couldn't do that, right? That's impossible. There's no way you can pull it off. And he's just the best leader as far as that goes. But the two best businessmen I've ever seen are Steve Jobs and Zuckerberg. There are ways to understand humans, understand the future technologies. Like, there was technologies Steve Jobs was talking about in the 1980s that didn't end up becoming big until the 2000s or the 2010s. And he could lay this out exactly how this was going to be the next big thing, and this was going to be the next big thing, right? And obviously Apple capitalized on so many of those things. I mean, could you imagine Apple's market cap today if Steve Jobs was still alive running that company? Sometimes I think about that, right? And I do wonder if Apple would already be a $10 trillion company. I really do. How fast he was pushing Apple back in the day, I wonder, like, if he had been at the helm for the past 14 years there, right? Because he's been gone about, 14 years now? I wonder, like, how big would Apple be? Would they be a $10 trillion company today? Would they be a $15 trillion company? Like, what would they be on in regards to technology? What would our devices in tech look like today, right? I think about that sometimes because not only would he still be at the company, right, assuming he was healthy and he wanted to stay on the grind, which I don't see any reason why he wouldn't have. It seemed like he loved what he was doing all the way until the day he passed, right? But I think Johnny Ive would have been right alongside him for this whole run as well. And I just think about, like, what would Apple devices look like today? What new products and services would they have in the market? And would they have created over the past 14 years that would have just blown people's minds and been the new forefront of technology? And I just think about those things, right?